Hello, Market Chameleons. Thanks for joining. We are starting the webinar now. There's my buddy Dimitri, and soon to join us, the famous chameleon Raj from Discord fame. Thanks for joining us tonight, Raj. This is a very exciting episode for all of us. The first time we have an active user of Market Chameleon who contacted us and wants to come on and talk a little bit about what he does with Market Chameleon. I know for those who don't know, Raj, the doctor, aka Jake, Jen from Boise, Idaho, the GOAT, Mike Moreau, they've all got together and have a Discord channel where they talk about the markets, what they're doing, and also, a little bit about Market Chameleon. But with that, a little bit of the ground rules for tonight. This is also the first night, and Raj was really the instrumental in this. D and I have never been brave enough, but if you raise your hand, if you're on the Zoom and you raise your hand and want to come on either with your voice or voice and video, we're going to open up questions that way. So we'll bring you in that way. So I think you raise your hand, we'll click on it with a question, and you can come on and join. So once we get started, we'll start with that, or you can just normally put in the chat or the Q&A. We're about a minute in. We have 24 people on the Zoom, so we'll give it a few minutes. While we're waiting, why don't we do the disclaimer? Even though this is Raj's show, we will give the typical disclaimer. What do you think, D?
Yeah, let's do that real quick. So
yeah, that is important.
Yep. So thanks everyone for joining us. So keep in mind, Will and I, Raj, we're not registered investment advisors or broker dealers. And Market Chameleon, not registered investment advisor or broker dealer. We're just sharing ideas. We're not giving you advice or telling you what to do. If you need that type of help, call your broker. That's what they're there for, to help answer your questions, provide you with guidance. There's the disclaimer, everyone.
All right. With that, Raj, why don't you tell us a little bit about Raj? What's going on?
Sure. Okay. Hi, guys. So I'm Raj. I live in Vancouver, Canada. So I'm on the Pacific time zone, and it is a beautiful day out here, about 3 p.m. I'm an architect by profession, so this is not my main line of work. I design buildings, hospitals, schools, residences, all that kind of stuff. And recently, I took hold of I used to live in the US, so I have an IRA account, which wasn't doing really well. So I decided to actively trade it. About 2 years ago, I started getting into actively trading stocks. Then I learned about options from a friend and self-taught myself through YouTube and many other resources. And then I discovered Market Chameleon, which made my life way more easier, because just designing option strategies and trades was a big hassle. Now, with so much of information and analysis at your fingertips, it's just a matter of comparing all the strategies that you have, and you have access to all the data, like I guess all the hedge funds and the professional people have. We, as retail investors, we never had access to that stuff before Market Chameleon. So I started playing with Market Chameleon, actively putting my money into it, and learned a lot through the process. So been doing it for 6 to 8 months now, and I really love the product. And I've been able to make some money based on Market Chameleon strategies. So that's about me, and I'm no expert. I don't know everything like Will or Dimitri know. They know the product inside out. But from whatever I know, I'm going to show how I use it as an end user. And wherever I make mistakes, Dimitri and Will of course jump in and correct me if I make some false claims or whatever. So I don't want to be doing that. I just want to show it from a user's perspective.
Yeah, and we got to be grateful for that, because I do talk to, we have a lot of users, and a lot of people feel comfortable talking one-on-one or the phone or on email, but and people have good ideas and they've had successes, and I try to bring them on, but it's hard to come on. You have to have a little bit of courage and be brave to kind of like put yourself out there and talk. And we really appreciate it, because you kind of came to us, and I know you've been on the Discord and you've helped a lot of people. We don't even get involved in that. It's kind of like the communities out there by, started on their own, and a lot of people are helping each other out. And we try to, also support that when we can as we're building this. But you know, we really appreciate it because, like I said, you got to be it. Talking to a lot of people, it does take some courage to come up, you know, put on the camera in front of you and talk and to people and try to, you know.
No, thank you to both of you for giving me the opportunity. And you know, it's my pleasure. I love teaching, and I love interacting with people, so helping people. So
Awesome
That's
job,
great.
Raj. Well, thanks for coming. And we've mentioned the Discord 3 times, I think, already. If anyone wants a link to join that Discord group, just email me. I'll put it in both chats at my email, williammcbride@gmail.com. And I'll get you a link to the Discord group. With that, Raj, you can get started.
Okay, let me start. I made a little PowerPoint or slideshow. So I will start with that. And then we'll get right into an active demo. I don't want to be just doing a slideshow. So we are going to look at purely using Market Chameleon. Is a very vast product, and there's lots of different things you can do. And it's impossible to cover everything in just 1 hour or even probably 1 month. But I'm going to just focus on earnings related trades and how you can use Market Chameleon to design strategies to profit from earnings. Okay, so earnings is not for everybody. It is definitely, like I put a warning here, flammable liquid. It's volatile, and many traders, many even experienced traders stay away from it. But therein lies an opportunity for people because most people are afraid of earnings and what it does to the price action results from it. There is an opportunity there, and I would like to show you where the opportunities are. Okay. So let me go into presentation mode, and feel free to interrupt. And I told Will as well that you know, you can interrupt me anytime. I might be going too fast sometimes. Okay, so the goals of the webinar, what the intention is what are the pros and cons of earnings report trades? So ER trades, what we call them. So there are you know, pros and cons to it. So we'll look at those. Then shortlisting of relevant Market Chameleon pages for ER analysis. So what are the important pages from Market Chameleon or the tools that we can use for ER analysis? And what are the aspects and angles to consider when you're planning to put on a trade? So those things, and making an ER analysis checklist. You don't want to go into it just because of a feeling. You want to analyze the trade you plan to put on thoroughly. So it would be helpful to have like at least a mental checklist of all the things that you need to check. And then you will come up with a bunch of different ideas after doing an analysis, that these are all the strategies that you can play. Then how do you compare them for the risk reward? So how much money are you putting at risk, and what is the reward for those strategies? Okay, so those are the points. So let's go to the next one. So what are the pros and cons, we can say, of earnings related trades? Okay, so first one is it's short duration, quick trades. So with options and with stocks, you can have longer time frames. With earnings, because it happens so quickly, typically 1 to 2 weeks before an earnings and a few days after earnings. You can even be a short duration as overnight. Let's say earnings is coming out today afternoon. You can put on a trade today and close it tomorrow. So it's up to you what opportunity presents itself, but it is short duration, very quick, can be a very good return, and you get immediate result of whatever action you took. You don't have to wait for several days for the profit to materialize or the loss to materialize, right? The other pro is the implied volatility. Volatility definitely goes high during earnings. So you can actually profit from that. So that's one of the, there is higher liquidity. There's a lot more action. Not many people are trading options and stock during this earnings period. So you have higher liquidity to be able to open positions and close positions. And of course, with that comes, you know, tighter bid-ask spreads. So you get better fills typically. Sector diversification happens automatically because you are not just focused on tech sector or the energy sector or the healthcare sector, because earnings are continuously happening, and whatever, there might be a company from energy sector that is doing earnings, which might be very liquid, Tomorrow, there might be a tech sector. So automatically you have diversification. And of course, with Market Chameleon, you have the Market Chameleon Edge, which is basically you get access to data, historical patterns. So all of the stuff is done by Market Chameleon in the end and presented to you in a very easily understandable format, which you can act on. And the other advantage of earnings is earnings patterns tend to repeat. So how does Netflix or any other stock perform during earnings typically tends to be the same from year to year. I mean, the patterns do not apply from one ticker to another, but typically any stock, given everything else is the same, the patterns tend to repeat. So we can use that to our advantage to find out how the patterns were earlier and what we can expect at that particular earnings season. And price action is irrespective of market climate. What that means is basically the whole market, SPY, could be going up or down, but relative to the market, whatever action is going to happen for that particular ticker, depending on how they performed in that quarter, whether it is Netflix or whether it is any other ticker, is going to be the same. I mean, the whole market goes up and down, like the tide going up and down is going to take all the boats up or down, but relative to the market, the price action is still going to happen depending on how the company performed. So it is in a way, even if the market goes down and the earnings are bad, the stock is going to go even further down. It's not going to, the market is not going to affect the earnings price action as much. Okay, so no questions yet, right, Will?
None yet, Raj. I'll let you know when a hand goes up or someone's brave enough.
Sure.
To put their
Okay.
face on it.
But people are showing you a lot of love from the Discord group, so just so you know.
Okay, thank you.
A lot of love
know,
coming from the Discord. Huh?
Just Raj, from the team, you have Gene's on right now, the doctor. So you have a lot of fans.
Yep.
Nice.
In the
Robert,
house.
yep.
And I already had 8 people ask for the Discord link in my email.
Okay,
so,
great, fantastic. That's good. Yeah, we want everybody to be on Discord because this is not a lonely game. Earnings, especially, you have to look at from many different angles, and collaboration is very key. Like I might see a particular ticker with my own perspective, my own lenses, and my own prejudices, but somebody else will see a completely different angle. So it's very important to collaborate. And that's why we have the Discord and many other ways. So yeah, everybody's welcome there. Okay, so price action after earnings. So mainly 3 things can happen after an earnings. The price goes up. If the company has performed well in that quarter, it will go down. Not just performed well, but the market sentiment as well. Even if a company has performed well, but the market expectations might make it go down. So from a price action perspective, only 3 things can happen. The price goes up, the price goes down, or it goes sideways. That is not much effect. Now, these lines here indicate what is the implied move based on, Market Chameleon gives you this data based on the straddle prices. What is the implied move? So the price, when it goes up, it can still stay within the implied move, the span of the implied move, or it can overshoot that. When it goes down, it can still stay within the span, or it can overshoot that, or it can stay completely within the span. So this is where strategies like an iron condor will profit, because it doesn't make a big move and then you've collected all the premium. So these are the 3 things mainly that can happen. So when we pick strategies, you got to find out, you can pick a strategy like this based on the patterns, which you think the stock is not going to move that much. Then you just pick a strategy which is going to benefit just from volatility capture or premium capture. Or if you think that the market is going to react negatively and the stock is going to go down, you can pick a strategy which profits from that. If it goes up, you can pick a strategy that profits from that. So these things, one thing is for sure, that something is going to happen to the price after earnings. Unlike, for example, some news event or some seasonality event, one thing is certain, that there is going to be some price action after earnings, and we can profit from that. So that's the key of why we do earnings, or why earnings are so appealing. So other thing that happens is, besides the price action, one other important, when you're dealing with options, is volatility, right? Post ER and IV crush. IV means implied volatility. So the options are implying a volatility. And that this is certain that before earnings, so this is 4 quarters of Campbell's soup, CPB. So before earnings, volatility tends to go up, and after earning, it crashes. So it goes up, it crashes. It goes up, it crashes. And knowing that, we can profit from that situation. Okay, so this is 4 quarters. This next slide from Market Chameleon shows you 3 years, 3 years of IV. And you can see wherever the E is denoted is the earnings. You can see that 2 things happen. The volatility goes up before earnings and it crashes, goes up and it crashes. And also the options volume goes up, right? For every earnings, you can see the options volume bars are way higher, 2 or 3 times or 4 times the volume of normally. So you can benefit from that as well, or profit from that as well. Okay, so I'm going to go into the demo. Before that, for some of the people who are maybe new to options or who don't understand the complexities of it, this is an illustration which shows when you're in an options price, whether you're buying or selling or opening or closing a position, or what do you say, going long or short, you pay a premium or you collect a premium. So what does the premium consists of? It consists of an intrinsic value and an extrinsic value. So the intrinsic value is if the stock is out of the money or in the money, or the strike is out of the money or in the money, then that's an intrinsic value. The extrinsic value is the volatility, time value, and interest rate and things like that, according to the Black-Scholes formula. So these are the things that are affected by earnings, right? So there's very little time value, but volatility is the key factor when you're playing earnings, because of the volatility crush, like we saw before. So that is one of the key things we need to consider. So volatility is an important factor. So the same picture now a little bit differently showed. So let's say the premium of an option is 2.07. So there is an intrinsic value. So it's an in-the-money option. So $2 is the intrinsic value and 7 cents is the extrinsic value. So intrinsic value consists of, is driven by these factors, which is the spot price, exercise price or strike price, cash flows of the underlying, and the interest rate, which is the risk-free rate. And the extrinsic value, which is the time and volatility. Now the proportion of this changes based on whether the option is in the money, out of the money, how much time decay, or how much time to expiry and things like that. But with options, these are the 2 main important factors, which is time. You don't have a lot of time if you're playing earnings, but you have very high volatility. Is that right, Dimitri, right? What?
Yeah, exactly. So the intrinsic value would be kind of like what if in a call, right, if the stock is already above the strike price, it has an intrinsic value, because if you could exercise it at a strike price and sell it at a higher price, then the difference is that's the intrinsic value. It has to be worth at least that, because there would be an arbitrage opportunity. So when the stock crosses your strike, that's the intrinsic value, the difference between the stock and the strike price. But obviously there's more, those options are going to trade higher, and that's based on the volatility assumption and the time you have to expiration. So yeah, so that's a good chart representation of how you would.
Yeah, it's simplified, but it's much easier than understanding the Black-Scholes formula for me.
Yeah.
We did have a question based on an earlier comment you made, Raj. It says, if a lot of people stay away during earnings, how come there is a lot of liquidity? I don't know when that was mentioned. That was the first question.
Yeah, there is a lot of liquidity because lot of people stay away. With amateurs stay away. Essentially, people who are afraid of the price movement and they cannot profit from it, or they don't have the tools to profit from it. They probably don't understand many other. There are some options traders which only know how to do naked options, like either buying a call, selling a call, buying a put, or selling a call, not complex strategies or multi-legged strategies. So those people don't know how to profit. But if you have a palette of many different tools in your toolbox, then you can profit from it. So liquidity, what I was explaining earlier, so especially options liquidity increases because to play earnings, options are a very good tool rather than buying the stock or selling the stock, because you can get in and out very quickly out of that.
Once you're done with your PowerPoint, Raj, Michael McRae is a big chameleon in the mornings, is asking. There's so many tools on Market Chameleon that even chameleons who are involved all the time don't know. He wants you to, this chart you have up right now, he wants
how
you
to get to it. Okay.
Yeah, he wants to know how to get to it. So
sure. I'll show you. I'm going to go there, and that's the whole point. I started with the PowerPoint, but let's actually go into Market Chameleon. So this is the home page of Market Chameleon, and everything is organized neatly for us in terms of menus. So if you're playing just stocks, most of the things are here. So we are concerned with earnings. So let's go into the earnings related pages. Okay. So before we do that, let me show him that particular. I'm going to just control click on this stock. So you notice that I'm going to control and click on this so that it opens in a new tab. So this is a tool that you can use if you want, and Market Chameleon allows you. That's one of the benefits, that you can have multiple tabs open with different pages. So that's a neat little trick that you can follow. So I am on this particular stock, and to get to that, that would be in the volatility section. So you have all of these different panels here. So under implied volatility, if you go down here, and for this particular stock, you can see that you have tabs here for the 1 year, 3 year, and 5 year. So I was on the 3 year for that, and here you can see, and this gives you a very nice juxtaposition of the IV versus the options volumes. So you can see how the IV and the options volumes basically move along during the earnings season. So that was that. So that should answer his question. So in addition to all the menus here, once you are on a particular ticker, so let's say you're on the Lulu menu here, LULU menu, and everything related to that particular ticker is right on the left, and it's organized very meaningfully or logically. Basic stock related information is here. You have your fundamental analysis, where you can, which are some of the new tools that they've released. Earnings related stuff is here, and then you have your volatility and options related things. So all of those are organized. So it's very easy to find your way down here. Okay, so back to earnings. So this is the earnings menu. So you have your free or trial features here, and you have the premium features here, right? So I went to the calendar, so which is the place where I start with usually. Let me close this thing. So the calendar automatically jumps to today's date. If you refresh the page, it jumps to today, and it tells you all of the earnings releases or earnings reports that are going to come out today. And then you can additionally filter from here. So typically I want to, let's say, filter by, let's say I want to see all of them that are coming out before market, right? BMO. So the ones that happened today, and I can sort the tables here. Did somebody say something, or am I okay?
Yeah, you're good.
Okay. So most of the places in Market Chameleon, you have these tables of data, but all of the headers on the tables can be sorted. So in whatever way you want, you can sort it. And I typically sort by options volume to see which are the most liquid options. And I have applied a filter of before market open. So these are the ones on this particular day before market open. So you can see that they were here. And this was the expected move or the implied move. And this is how it moves. So this was the price action after the move. And you can hover over it, and it actually tells you the whole time frame, like 2 days before to 2 days after the earnings, what the move has been like. Then you want to see only the ones that closed, after market close. So this will now sort on, and it will show only the AMC after market close. And again, you can sort by this. So you have these tools. This is what I use. So let's say I want, today is my trading day and I want to see what can I trade for tomorrow. I can also look at, during the trading day, I can look at after market close or next day before market open. So it actually takes the things from next day and today, the earnings that I can act on right now. So I can now see that this is happening after market close today, and this one is happening before market opens tomorrow. So any trades that I want to place for this pre-earnings have to be placed today before the action. So that's useful here. And I cannot, if let's say I know that some particular ticker is going to be releasing earning, let's say I can also filter it that way. Let's say any today, and I knew that BlackBerry was releasing earnings today, so I can filter by and just directly jump it in rather than going through this whole 4 pages of earnings. If I know something, I can just jump right here. Say CHWY, I think Chewy released earnings, so I can just jump to it, filter, and this applies to most sections of Market Chameleon where you have this filter. Okay, so that's the calendar page. So that shows you what's coming up. Under the calendar page, if you are a paid subscriber, and then you get this additional tabs. So you can see the overestimated, underestimated moves versus 4 quarters versus 12 quarters and today's opportunities. So this one particularly I like because it actually goes through many factors from historical data, 12 years of observation or 12 quarters of observation. If you place this particular trade, what is the win rate that has happened historically? What is the average return if you put this particular trade? And what it actually does is it actually picks a trade out of you from the hundreds and thousands of possible. It picks the best one for that particular stock. And it presents it here. So if you're looking at, let's say, debit call spread, and it also gives you a handy picture or a thumbnail here, which tells you what is the expectation. That this obviously tells you that it's a bullish expectation. And what is the best trade? If your outlook now is bullish, what is the best trade from all of the possible ones, considering all the factors, which is volatility, historical performance, risk reward, theoretical value and edge, all of those things that Dimitri does or Market Chameleon does are presented and picks the best one. So once you have this, you can and all of us know about. Let me zoom into this picture a little bit. The font is a little bit smaller, so let me refresh this page. Okay. So everyone knows about this. This plus sign will add it to your watch list, right? And this one here is a handy little pop-up menu that gives you a little cheat sheet about the company. So you can look at all the relevant data right here without switching pages or going to some other page. Look up the company. If you don't know what this particular ticker stands for, you can pop this pop-up up and look at it. And you can move it around on your screen. If it's obscuring something, you can move it by dragging the bottom or the top. You cannot drag it from the middle here. So you have to drag it from the bottom or the top. And then again, it has tabs. So you get the overview with all the important information like the 52-week high-low, equity, the volume of the stock, the options volume, all of that stuff. Then, you get a little about the company. You get charts as well here. So you can look at, historical charts or the daily charts. So you have your historical chart here. You have your daily chart. So a bunch of different things. So we are looking at earnings right now. So I'm going to focus on that. So we look at options. So this tells you in a summary, what is the open interest in the volumes at some particular expiration dates and strike prices. Any news that might impact the earnings, that you can look at. All the news is put together here, and you can look at the earnings tab as well. So the historical earnings and what is the projected earnings, right? So that tells you like, it shows you what is the price action from the last earnings. So that pops up here. So you get all of that. And then here you get to see what strategy is recommended. It's a debit call spread. And if you click on this one, it'll actually open a new tab and take you to a pre-populated page with the strategy, right? So the strategy is already loaded. So this is the strategy with the prices, and you can just look, you click the load strategy button, and it's actually going to give you a profit loss diagram, right?
Hey, Raj.
Yeah.
Abhishek was asking, I may have mispronounced that. He was asking previously when you were looking at your screener,
yeah,
where is the strike price when you were hovering over? So this is how you'd get to the strike prices, correct?
Yeah. So on this particular, on the earnings calendar and today's opportunities, you get, there's a lot of data in here. And if you hover over each field, you get information. For example, you get a thumbnail here. Here, if you click on this, it will pop up another, showing you the past studies. But if you hover over this, this current market, it actually tells you, even without going to the strategy page, it tells you what are you actually doing. So option expiration is 16th of April. So for that, you are buying a 155 call and selling a 160 call, right? So that it tells you right here. So what you need to do to open this position, even without going there. But if you need to analyze more in detail, then you can click on this hyperlink here, and it opens up your analysis page with a lot more analysis that you can do here than just looking at it. If you're happy with the analysis right here, you can just execute it, and you kind of know that what is the time frame for this particular result to achieve over the last 12 observations, that you open 2 weeks before and you close it on the day of earnings. So this is what has happened in the last 12 times that if you executed this or opened this particular position.
So Roger is asking a question, and I'm assuming you're using the screener to select the ticker. He's asking, how do you pick a strategy for the ticker?
Okay, so that's a good question. So let's say now I have identified, let me look at something that is coming up in the future, so it will make more sense and it will also help. So this is tomorrow's earnings now. I'm going for March 31st. So let's look at what are the earnings coming up tomorrow after market close. So tomorrow, before market open is already over, because if you wanted to do something, it was to be done right now. So I want to look at tomorrow after market close, right? So then I'm going to sort by options volume. I typically want to pick the ones with the most liquid volumes. And that also mostly means that I'm getting a bigger company with a bigger market cap. I don't want to be, playing earnings for small companies like this 20 million market cap, because these are very risky as well. They don't have much liquidity in the options. So you want to be either sorting by the market cap or by the options volumes. So here, let's say now MU, which is Micron Technology, is going to come up. So then I go to today's opportunity. Let's see under today's opportunities for this particular.
So right, the today's opportunities will just stay today. They won't move with the count. Yeah. So it's just scanning like what's actionable now, because tomorrow we don't know what the markets will be.
Yeah, true.
We don't know tomorrow's opportunities the next day because the markets are changing. So so
that's a very important point. When I click on today, it's going to do what is actionable right now, because sometimes the best strategy for it may be opening 2 weeks before the earnings. So based on historical patterns, MarketChameleon is telling you that 2 weeks before and day of earnings. So basically, you're going to have this position open for 2 weeks. Right? Some positions you might have, you can even sort by say, what can I have only 1 day before and 1 day after? So this is just, you're just opening this position for 1 day. And within 1 day, historically, there is you can make 20% return. So which is not bad if you do your due diligence. It's not like this is guaranteed, but this is based on historical patterns. Okay, so let's look at today's opportunities, for example, and I'm going to look at JPM is one of the stocks we found. So let's look at what are the other strategies that are identified for JPM. And you can see there are a bunch of them, right? And each of them are different in the sense that some of them open 2 weeks before, close day of earnings 2 weeks before, 1 day before, you close 1 day before the earnings. This is, so these are different opening timings and closing timings, right? So these are different strategies in that way, depending on your time frame. And there are also different types of strategies based on, whether you want defined risk, undefined risk. There'll be different strategies again, right? And some of the based on your account type as well. Let's say if you're in an IRA account, you can only open defined risk strategies. So only these will apply to you, right? So I filtered out JPM, and then out of that, then again, among all the strategies that are shown, you want to pick which suits you the most in terms of time frame, in terms of your risk reward, in terms of your different parameters that Market Chameleon has chosen. So what I do is I sort by Sharpe ratio, because Sharpe ratio tells you the deviation. I mean, I'm not going to go into that. You can read about the Sharpe ratio. Dimitri has a lot of videos about that. But if I thought that, so these ones basically means that the data is a lot more consistent going across for 12 periods. So the higher the Sharpe ratio, the better is the, it stays within a certain track, not, deviates from the mean too high or too low. So higher Sharpe ratio is typically better. Or if you don't care about that and you want the highest return, then you can sort by this and say this strategy is going to, there's an 83% chance historically that this is the reward I can get. But it is a naked strategy. You're buying, single leg. So you can sort by any of these. Let's say you don't care about any of that. You just want a very high win rate based on historical. So this one has a 92% win rate. Sharpe ratio is not bad, and average return is 16%. Now, what you got to note here is that this is already filtered for you. Market Chameleon has already gone through, and out of all the possible earnings positions that you can open today, it has picked the best ones. And out of the best ones that it has picked, you can pick furthermore. So it has picked the ones with, better than 70%. I think it's always more than 70% win rate, right, Dimitri?
Yeah, I think so. You could filter, but so it looks at not only the historical patterns in this situation, but it also looks at the present markets to see if it makes sense. Because if it doesn't make sense anymore, it'll even if historically something looked pretty good, but the option markets are now very distorted, not lined up.
Mm-hmm.
It will skip it. So like you said. But I think in this situation, it looks, and you could go to the screener and do this yourself. It just kind of shortens the list. But it'll look at, I think, at least historically a 70% winner. And then it'll scan the markets to see how do they line up today, to make sure that, because like if a call is priced at $1 million today, there's no way, that you should be doing it. So it still compares today's prices to see if that makes sense.
So one of the analogy that I can use probably is, I may be, Dimitri can say whether I'm right or not. This is like an a la carte restaurant where all the dishes are cooked for you, and based on all the infinite possibilities, it has picked the selected ones based on parameters, and you have the opportunity. But if you want to cook the meal yourself, it will give you all the ingredients, and you can go to the screener. There is, if I go here, and you can say the earning stock pattern screener, and this will actually, you can filter out. Let me pick any one of the pre-made ones. So high Sharpe ratio and win rate, let's say. And then I can search for, opening market cap of 10 billion. So opening within next 5 days, win rate about 70%. You can give all the parameters, whatever you want, and it will pick the option, but it does not pick the strategy for you. So this one tells you that these are the returns. And stock pattern statistics. Then you got to design your own strategy around this. The
Yeah,
other
this
one,
one isn't. This was just the stock one. The other one was the option.
Oh yeah, so there is another one. Options, earnings, strategy screener. Yeah, so there is this one which actually picks the strategies for you. So let's see actionable opportunities within the next 5 days. And oops, hold on, I don't want that page. So now it is populated based on all the parameters. So it is pre-populated the filters based on the saved list, and then it gives you the strategy that you can use. So you can further filter this down, and you can, for example, now this is the credit put spread for this, and this is the, it doesn't give you the strike prices, I guess, but days to earnings, but it can tell you this strategy will work the best for this one with the 50 delta and a 25 short of 50 delta and long 25 delta. So you got to go and find those particular strike prices closest to this delta and design it yourself. So that's the difference. And then here, of course, you can again filter. Let's say if JPM or MU pops up here. So nothing for MU, but based on the filters, it will populate this. So this is the screener. So this one is like an a la carte meal where it has already picked the legs for you. And all you got to do is just click on this particular thing, the link, and it will open up the option chain with the legs pre-populated for you. So it has already picked the legs for you. And then all you got to do is hit this button, load strategy, and it will build a profit loss diagram for you. And it's not just your broker platform can do this to you, but what I like about Market Chameleon is, in addition to doing this, it superimposes on these layers of other valuable data which are important for earnings. Like, for example, I can look at this. I can say, show me, now it's showing me 1 standard deviation. I want to see what is the 2 standard deviation move. So if the stock makes a 2 standard deviation move, I will make a loss. But as long as it makes a 1 standard deviation move, I'm going to be in profit, right? If the current price is here, current spot price, and if it makes within 1 standard deviation move, so that's one of the reasons that it has picked this strategy. Then I can say actual moves from the last 12 moves, let's say, right? So it'll show me what are the last 12 quarters, where has the stock price moved. And you can see that it's capturing all the 12 moves for me. So if it makes, as long as it makes according to its historical pattern, any move, and I'm still in profit with this particular strategy. I can look at the average of last 12 moves. So if I take all the 12 moves and average them out, and I'm still profitable with that, I can look at, just the last earnings. What did it do last earnings? So recent earnings move, it actually moved, it would have made a loss. But if you look at 12 of them, it's probably still profitable. Then these are the actual historical moves. What are the implied moves? So implied moves typically line up with the 1 standard deviation. So you can see that. And average of the last 12 implied. So what was implied and what was the actual? So this is the average of the last 12 implied. So you can do all of these things here. And you can also look at the other parameters. Let me show none here. And you can, for example, the Market Chameleon also takes this particular strategy and it gives you, what is the midpoint. Typically, you want to be making a fill near the midpoint, which is called middling of the market. But it's assuming that you're going to get paid only so much for this particular strategy right now. So you can see that it's $11 is the profit. So it's assuming you get filled at this price, but you want to shoot for, close to the middle price. And it tells you the resultant of this particular strategy, which is a 2-legged. What is the resultant delta, gamma, omega, all of those things. Then you have tabs here for theoretical value, which using their algorithm, they calculate what is the theoretical value of this. And it tells you that there's a 92% win rate and theoretical edge all of those things, and you have your other tabs here. So you basically, once you pick your strategy from here, you can drill down and do your further analysis with this, right?
Yep.
And if you want to change, tweak this. Now, one other important thing is if you're collaborating, let's say instead of the 50, I want a wider spread. So instead of the 56.5, I'm going to buy the 58 point, or let's say 57, right? I can change the strike prices here and then load the analysis again. You'll notice, just observe this, all of these things will now change once we load the strategy, right? So it'll have a different price, your different strike prices, and a different profit loss profile. So you can change it right here, or you can even add, if you want to make this an iron condor, let's say. So you have the call side, you can now add the put side for 1st of April. So you're going to, I'm just going to randomly do here. So we have the call side, and on the put side, let's say I'm going to add this leg and say this one. So I'm going to sell 50 and buy 49. Okay, so this is, let's make it 47. So now I've converted that vertical spread into an iron condor, and to reflect the profit loss, I just have to click this button again. And now I can see that it's an uneven iron condor because the widths are different on each side, and then I can do my analysis further. So like this, you can change all of these things. You can look at, what will be the payout diagram on this particular. So it shows you, like, if you close this particular strategy on 31st of March, what does it expect? Let's say, what if the implied volatility goes up? And you can load the strategy and look at this one. So implied volatility is different, so you'll have a different profit loss diagram. So you can play with all of these parameters. And an important tip is, let's say you want to discuss this with your friend or with your peers, that what do you think of this strategy? You want to compare strategies. You can click on this copy link button. And what this does is, let me open a notepad. So it basically captures this link, which gives commands to Market Chameleon to which options and all those to pick. So this is where it is. So you can capture this link, and then you can paste it in your, I'm going to bring my Discord screen up here. So let's say on the Market Chameleon Discord, I'm just going to put this here. How about this strategy, right? So once the link is there, somebody else can just click on this link, and it will, they don't have to do all the work of picking all the different legs and all of those things. They're already pre-populated. And then they can look on their own screen, they can compare the strategy, and then they can tweak it a little bit more, and they can share a new link with you. So you can go back and forth like that. So that's the advantage of, using this link. You can also
knew that existed, Raj, till you just showed us. That's
Sorry?
incredible. I didn't even know that was there. I learned something new every day myself.
Yeah, there's, that's why some time ago I wanted, there was a little bug with this particular copy link feature, and I wanted it fixed because it's a very useful feature. It can save tons of time when you're collaborating, especially.
Yes, for everyone who doesn't notice or joined late, Raj copied that to the Discord group, and a bunch of the Discord members are on. Jake, Ahmed, Gene.
Yeah. There's all of these
if you want to link, I put it in the chat on both YouTube and I'll put it out again. If you want a link to join the Discord, email me at williammcbride@gmail.com and I'll get you that link. We also, just everyone knows, we have a morning show every morning. You can ask for it then. That starts at 9, goes to 9:30. Someone else also asked, can they get this video sent to them? We put all of both our morning shows, all of our webinars drop to the MarketChameleon.com YouTube page. So you can go back to the beginning of the time when I had hair and see those episodes. So I'm putting that link both in YouTube and on the Zoom. And sorry for the interruption, Raj, but
yeah, no worries. No, it's important. Yeah, feel free to. While I have the Discord screen, I just want to show for people who are not here, we have various channels on here. Once you are in and once you accept the conditions, I guess, not to, harass anybody and things like that. You have channel for earnings. So all the earnings related plays we discuss here and share. There's a general trading floor for all kinds of chit chat, risk defined options, equity trading, all of that stuff is in here. And there's, a lot of people in here. 461 members, but at any given time, about 20, 30 are active.
And Jake always says this: if you're going to join, try to be active and try to bring some, like, the communication and idea discussion is really why it's there. So if you're going to join, try to be active.
And they have been, we've been, and I know there were some issues there, and they're being monitored. Like, some people kind of came in there with not the best intentions of, like, just promoting somebody else's, their website or something. But, these are people, it's member run. They want to build a community, sharing ideas and stuff. So, you don't want to do that and get blocked. People want to come in there and learn, right? So the idea is you want to ask questions, learn, and alert people to other things and news that you might not know, or ideas, sharing ideas. Because I go in,
just helping each other. More eye than more minds, and more intelligence is better than one person solitarily trying things out, right? Always just helping each other, because the market is a big place.
Yeah,
and there's many different things happening.
Yeah, and then I don't know if you noticed on the Discord, but other websites are mentioned all the time. You just, there has to be a reason for mentioning it, right? An article, you found this chart was interesting to you. It's not just about Market Chameleon. It's about everyone's viewpoint on what they think is going on, either in an individual stock or the market in general.
Yeah.
Just a couple things from the questions, and either of you can answer this, but they're asking, how often does the data update in the screeners? And is it real time or delayed? Those are two questions.
Okay. So the market data, yes, it's delayed at least 15 minutes. So market data, we have to buy and license that data from the exchanges. We don't control that data. It's not our data. And they have restrictions on the real-time data and delayed data, and they have controls in place, and some of those controls that they require interfere with their own service, such as, like Raj was showing you, side-by-side comparison, multiple screens, data downloads, and so forth. So we wouldn't be able to do exactly what we're doing with the real-time data, but at the same time, that real-time data, you have to license it. Whoever gets real-time data actually has to sign a contract with the exchange. You could do it through us, but you still have a contract with the exchange. So it's on a 15-minute delay, and then those screeners are updating on a timer. So all the screeners you're seeing are so intense, you wouldn't be able to do it because of real time. You have millions of ticks per second. So there's no way you could, on every tick, recalculate everything. You can't do that anyway. It captures the data, goes through an intense analysis, because it goes back years of data on every recalculation to get the theoretical values, the probabilities, risk rewards. So there's nothing in the real time. But I don't know, Raj, you're a user, right? For a long time. You've been using it, you see, like, it's really a research tool. Has it been a big burden to you, like, with the real-time data?
No, I don't think so. And if you're looking at tick-to-tick data and trying to do what we are doing with options, and then you are not doing it right. Typically you want, if you're designing a strategy for earnings or whatever it may be, you want, a lag in the way you think. You don't want to be, just doing on every tick a trade. And it automatically, that 15-minute delay actually is beneficial, because, for example, now when I load analysis on this particular thing, this strike prices maybe 1 cent here and there. By the time in 15 minutes, it might have shifted 1 or 2 cents. But for a complex strategy like this, you get an overall picture of the strategy, which is not going to shift a lot for, like an iron condor or something like that. So even this data, whatever value you are getting out of this is valid for, several, even an hour, up to an hour. It's not like it's, stale information.
Raj, I know there's a lot of questions out there about the Discord. I know it's kind of off topic, but one of my favorite morning chameleons, Jean, is on, and she says she's on the Discord, but is hesitant to ask questions because she doesn't feel her knowledge base is up to it. You're comfortable asking questions for rookies on the Discord?
Yeah, actually, I was kind of like that too. And I said, unless you ask a question and you say, what do you think of this? What do you think? Show that you don't know. People would not help you. Nobody there is an expert. And you only get help when you ask something. And having said that, I don't think anybody should feel shy about it. There's all levels of people on that. Even I consider myself an amateur. And I learned so much through just asking questions. So don't be shy about that. And there's always so many helpful people who will point you to the right direction, or take time and actually help you even analyze your strategy. What do you think of this strategy? And it's incredible. Like, somebody will go out there and spend 15 minutes and look at the thing and tell you what they think about it. It's valuable input from somebody.
Well, she says she's learning a lot, so just by reading it. But definitely get involved.
While we are on that, I'll also show you one neat trick. Let's say I showed you this, you can copy this link, but sometimes you just want to share a picture or a screenshot, and you can see Jake and many of us share it. For example, I want to share a screenshot of this. In Windows, I don't know about Mac, but there's a shortcut. If you press Windows key, Shift and S, and then it pops up this little snipping tool. You can just grab a screenshot of this, and then once you grab the screenshot, the screenshot is here in my side panel. So it opens in this particular app, which is called Snippy. Here you can see the screenshot. I can mark up on this. What do you think of this, right? Or I can say drawing. What about this? What about this? And whatever I want to draw, and then copy this to the clipboard. And in Discord, it's pretty easy. I just go to Discord, and I'm going to say in my earnings play, I'm just going to click here and Control V to paste it. And I can add a comment. What do you think? Testing. Okay. And then it gets pasted there. Within few seconds, you can have somebody look at a visual picture rather than, going through something. So you can have very quick collaboration that way. Using just pasting a screenshot or pasting a link. Okay. That's great. I think we are almost coming to the close time. That was a lot of information, but so these are some of the important. And I guess we can do a part 2. So some other. Do I have a few minutes, 2 or 3 minutes? I'll show some other.
You have 2 or 3 minutes, Raj, and I'm hoping this isn't the last time we'll see you on a webinar. So get 2 or 3 minutes, and everyone has loved this.
Okay, good. Well, I mean, if everybody wants, we can of course do this more often. This is just a trial basis that we are doing this. And just like me, I mean, there'll be other people who know Market Chameleon a lot more better than me, and everybody's welcome to come and do their own little shows. I'm sure Will and Dimitri will be happy to have somebody else also do this. So under earnings, so we looked at some of the important pages. I'll tell you to do your analysis: the implied moves and the IV crush. So this page gives you, if you click on the Alt tab, it tells you like the last few quarters or earnings, what has been the implied move, or what has been the implied move, and what are the actual move. Or so this is very important. So this tells you, for example, which is this stock. Let's look at Micron, because it's coming up. So for Micron, which is coming up tomorrow after market close, this is what is implied. So if you hover over this, so implied move is 5.7%, and you can also look at the axis here and see what is the ratio, and this is what has happened. Actually, it's in gray, so this actual earnings hasn't happened. Once the earnings is released, then this would change into either a red or green, and then get snapshotted, framed for future. It doesn't update anymore. Right now, this is still live data. Then you have your volatility crush, which is important if you're doing a volatility play. So it tells you the last few quarters what has the volatility tended to do. So you can see this is before the earnings and this is after earnings. And it gives you a few days before earnings and few days after earnings. And it also gives it to you in a table format. So for Micron, for example, historically, volatility has gone up, 54, 55, this is the percentage. And after earnings, day of earnings, it drops. So almost, 10 points, or that's about how many, 10, 20%, I guess. And then it keeps dropping after that. So you can see those kind of statistics. So this is an important page if you're doing earnings analysis. The other one I look at is the post-earnings drift. So between earnings quarter to quarter, what has the drift been like? Like you can see here that it drifted up 27%, and the earnings, and actually the stock also moved up 9.6%. In this case, the drift was 68% between earnings, but the earnings effect was 2.5%. So what this means is that the stock drifted too high beyond market expectations, and then the market actually, the price adjusted after that by -2%. So you can look at this visually. You can look at averages here. So current drift is this much, and historically or average, it has been so much. So you can look at that data. You have a table here. So it tells you every quarter, what are the drifts since previous earnings, the last release. So this was how much the stock drifted up, 68%. What was the EPS surprise? Or so it beat the earnings per share by 7 cents, and revenue surprise was so much, it beat the revenue by 43 million. But despite of that, the stock price dropped. So it could be because the drift was too much to the high side. But so you have to do your own analysis to figure out what is actually happening, whether the market is expecting too much or too little. What is the underlying news for that sector? So there's many factors that come into play. So this is the second page, post-earnings drift. And then you can look at earnings estimates. So this one is, I look at this because it had links to the previous press releases from the company, so which are right here. But it tells you like quarter by quarter, what was the earnings estimate. So what, you can look at it and see, okay, so the market was estimating 71 cents and actual was 78 cents. And this was the surprise. So revenue was expected estimate was 5.7. It actually beat that by 5.8. But despite all of that, the stock still dropped, right? So you can look at this quarter by quarter. So this page, implied moves, price earnings drift, earnings estimate. This is one I like. And you can look at the press release. If you click on this, this will open in a separate tab. And this is also useful to look at because the company gives guidance about what we can expect the next quarter. So there might be some key, you can scan through this and check what do they think the next quarter is going to be like. So those are some of the pages that I go to for my earnings analysis. And besides this, then I also look at volatility side. And if I'm doing a volatility play, so this tells me, what does the volatility trend to do for this particular ticker. And then another one is the skew between volatility. If your trade involves profiting from volatility crush, so you can then compare expirations and see, for example, for this particular strike price, 90, between the day of earnings. So let me check. And if I'm doing a calendar spread or a diagonal, like selling the front month, buying the back month. So what is the volatility crush? So it tells me that this is at 80% right now for the front month because of earnings. And you also have the E next to it to remind you that this is actually earnings related. So there's earnings coming up for this expiration. And then I can pick, okay, so what is my crush I can expect between 1st and 9th of April. So it tells me visually, or let me say if I go to 16th of April. So, and different strike prices, wherever the difference is the most, I can profit from that. So this is another section which is very important if you're doing earnings. So volatility section and the earnings section. Okay, I'll stop there.
Okay.
Wow, that was awesome, Raj. Actually, Wayne King says, superior job, Raj. I learned about a couple of things I never knew existed on the Chameleon screeners. Thanks so much.
Welcome.
So great job, Raj. Lots of applause out there in the Chameleon community. You were great, my friend. Thank you so much.
Yeah, thank you for the opportunity, and thank you for the patience.
Thank you, Raj. Yeah, great job. That was amazing. You know, you showed a lot of information there on earnings. And I think we had some maybe we didn't get to all the questions, but some of them I think also just probably are questions that deserve almost like a webinar on its own.
Yeah, we can do a second part 2 of this and go into the questions. You can capture the question from the chat and do it, or whoever is on Discord can feel free to ask there, and we can go to some of them there as well.
Awesome job. I just captured those questions, Raj. I'll send them to you. Everyone, particularly Raj, thanks for coming today. Raj, thanks for doing this. All the chameleons in the community, thanks for supporting us tonight. We do a morning show every morning, 9 to 9:30. Maybe Raj, well, that's super early for you on the West Coast.
I actually do attend the morning ones. I don't do the chat because I'm watching it from my TV or from my yoga mat. So, doing two things at once.
Start your day, everyone, on a yoga mat with Market Chameleon in the background. Awesome. All right, great job. Thanks, everyone. Dima, I will see you 9 a.m. tomorrow morning. Should be another fun show. Thanks so much.
Thank you, Raj.
Thank you, everybody. Bye.